Welcome back. You're watching HFO TV. HFO TV is co-sponsored by J.R. Johnson LLC, specialists in multifamily restoration and repair work. Gantry Incorporated, the nation's largest independent mortgage banking firm.
Welcome back to HFO TV. I'm Greg Frick, partner at HFO Investment Real Estate. Today I have with me Lee Fehrenbacher, one of my senior brokers, and we also have Mike Wilkerson back again from ECONorthwest. Mike, thanks for taking the time to do this. So just recently, last week was the State of the Economy report you guys put together, and I thought it'd be great to have you come in and kind of shine some light on that for the people that haven't seen it. There's a website below where you can kind of look at the summary and get the report, but Mike's going to give us a little bit more in depth of what they found for the state of the economy. So again, thanks for taking the time. I know it's a busy time of year for you guys. A lot of stuff going on, a lot of needs, but it's really good for our audience to be able to hear kind of your take on the report. So again, Lee and I will kind of ask questions. So why don't we just kind of jump right in? Do you do this report every year, or is this something that was unique for your ECONorthwest?
So we've been doing this report since 2011, 2012, right? With the Portland Metro Chamber, formerly Portland Business Alliance, as part of a Value of Jobs series. And it evolved, let's say, 3-4 years ago into now the State of the Economy, rather than being called the Value of Jobs. And I think, what we do is typically take a year review of what's happening in the region, but through the lens of like, what are our peer regions doing also? So that it's like, not just in a vacuum, Portland did this, but relative to what we think are relative benchmarks. And this year was a unique opportunity that about every 5 years or so, we revisit our peers. And so this year we revisited our peers. Previously we had Austin. We always look at Seattle, so they're not technically a peer.
It's not really a peer, but just because
regionally they're there. But our peers were truly Austin, Nashville, Indianapolis, and Salt Lake. And what we noticed over the last 3-4 years was we weren't keeping pace with them on most metrics. And largely that had to do with population change. And so what we did now is say, okay, let's look at this. Let's look post-pandemic. The economy has changed quite a bit. Who are reasonable peers for us? And so the process revealed now Denver, Sacramento, Minneapolis, and Milwaukee as kind of our data-informed peers, some of which are geographically on the west and some of which are not.
And so when you said like you're looking and we were no longer a peer for Austin, Nashville, is that because in the last 5 years things have changed where they've gone one way and we've gone another? And when you're looking at peers, or how far do you go back to say, hey, here's there similarities, or it's a point in time today where we want to peer? It's
both. So we look at long-term trends. Okay. So things like population growth over time, for example. We start with saying we're not going to compare ourselves to mega regions like LA or Bend. So we limit it. And so we're already talking with about 50 or 60 metros are of a similar size to ours. So we're already down to, not that many places. Okay. And then we're really just sorting amongst those places. And what we found is, typical indicators we look at are, job growth, GDP growth, and just levels of GDP, median income, those types of categories. And what we found was, every year we do a year-over-year comparison, and Portland was not doing great on pretty much all of those metrics relative to those peers.
The first set of peers we talked about.
The first set of peers. And that's not the reason that we changed the peers. It's helpful to know, like, this was your peer at the time. Starting in 2017, we set those peers. And again, we'll look at the data, but you'll see that was at peak population growth for the region. So at that time, we actually were on pace with them. What happened was that was our peak. And so as our population started to grow, but less slowly, our jobs couldn't keep pace, right? You're not adding as many people, you're not adding as many jobs. Your productivity is not growing as much. So all those things we started to realize it wasn't necessarily an indictment that Portland wasn't doing well as a region. It's we weren't the fastest growing place in the country anymore, which we once were.
Yeah, we were like top 5 on everything.
And now we're not. And so now this isn't appropriately sitting. These are still places that are, I think people think of as places that you want to be. They're good regional centers. They're growing. They're attractive for a variety of reasons, both natural amenity and otherwise. And so, that's why we do this process. So now we can say, okay, let's benchmark how we're doing. And when we get to the central city, that I think is the most important thing, where people are like, we have a lot of problems that are Portland specific. 100% agree. And we can, talk about that at length. But a lot of our problems are not unique to Portland. And we look at now these peer regions where you say Denver, you say those places and you're like, actually our downtown's performing about as well as those are. That's a very different lens of a conversation than saying we're not the same as we were in 2019. Yeah, they aren't either. And so that I think is the helpful lens and why this report was uniquely timed.
So in looking at those new peer regions, and just in your analysis recently, were there lessons that you were able to take away in terms of, how Portland stacks up to those economies, but what are they doing that we're not doing, and that kind of helpful lens and kind of being able to compare?
Yeah, absolutely. So, I think for us, what I would characterize Portland as is middle of the road on almost all of the measures, which is good and bad. I think it's saying there are some regions like Denver's GDP is growing twice as fast as ours. What industry mix can we think about?
That's what I was going to ask you. When you're doing these peers thing, do you have to look at the industry kind of base within that?
You do a little bit for sure, right? Because they're heavy into energy and those types of things. And so for us, I think, when you look at this last year, our jobs grew more slowly than they have the last previous years and didn't even keep up pace with U.S. National jobs. And that's atypical for us. But more troubling was where we lost jobs were in our most productive industries. Business and professional services, manufacturing, and information, which is a loose proxy for, let's say, tech. And so when we're losing jobs in our most productive industries, that helps us understand, we got to emphasize that. And the CHIPS Act is an example of, this is a huge opportunity to really emphasize attracting and retaining and growing highly productive industries, because if we're trying to look at Denver as a competitor, they're doing much better on the productivity growth. But on jobs, for example, we're doing, so every measure is a little bit different. I think so. The takeaway is we're doing well in some areas, other areas are opportunities for improvement broadly in the economy. I think the question of the day, though, largely is centered around what's happening in our central city. And so we'll get into some of the data, and I think that's where you can start to see some lessons learned and some opportunities.
And then I know, we've talked about this, and I know Lee and I have talked about, we hear a lot about, the population growth and what's happened in Multnomah County, what's happened in the city of Portland. As you said, 5 years ago, we were the darling. We had so much immigration. Kind of shine some light of where that's been and kind of what you see regarding that.
The first slide we typically start with is kind of the big picture, which is the state of Oregon. And so just for some contextualization, the state has only lost population 5 times in its history, ever, and hasn't in the last 40 years until last year and the year before.
So of the 5 times, we've had two of them.
2 of those were the last basically years of data that we have, which are 2022 and 2023.
Okay. When was the last year prior to 22?
Pre-World War.
Okay.
And so at the state level, we now have data through 2023. But what it's showing effectively is this, pretty cyclical nature of our population growth. But the fact that we have 2 down years now, I think, is raising the question of, is this a trend that's going to continue, or are we kind of getting back to some situation? And we don't have a great answer to that. I think the forecast at the state level is suggesting we're going to start growing again, but it's very unclear. When we look at the city and the region, let's say the region, we don't have 2023 data yet. But I think it's a near certainty if we lost population at the state level, there's almost no chance that's not largely centered in the metro. When the metro is doing well, it's benefiting the state and vice versa. And so what that would mean for the metro is 3 successive years of population loss versus 2 at the state level. And we start to unpack that more.
And how much of a shock was that to you in looking at, as an economist, looking at this with what we've been through for the last 12, 13 years, and then all of a sudden, okay, year one's one thing, having it a second year, as we said, we're probably going to see it in year 3. What kind of light does that turn on with you?
Yeah, I think if you go back to 2017 and you said Portland is going to in the next 5 years have population decline year over year, you would have had 0 people out of 100 say yes.
Totally.
Oh, exactly.
Now, totally. How much of that the pandemic accelerated and exacerbated? Yes, but we saw a slow erosion of that growth heading into the pandemic, and I think that we didn't really see very clearly at the time. We were kind of still caught up in what was happening before, and so I think it caught most of us by surprise. What I think is interesting is, even more surprising is the regional dynamic. This isn't like the same everywhere. It's hyper concentrated in Multnomah County,
right,
and a little bit in Washington County, and Clackamas County is not growing. Clark County continues to grow. And I think 8 years ago, if you had said, what's the fastest growing county in the region going to be, nobody would have said Clark County.
Right.
No chance. And at the time, it wasn't the fastest growing county. It just hasn't declined. It's continued to grow at the pace it's grown at. I think the challenging piece is, as a state, our demographic future is generally set, which is we aren't going to naturally grow. More people are going to die than are born in Oregon from now until as far out as demographic forecasts go. And so when we look at that, that's a massive headwind. Most regions have natural growth, and migration, either adds to that or takes away from that. We now no longer have natural growth. We're starting from a deficit every year, and unless we're growing from a migration standpoint, we're not growing.
And is that the breakdown because of our demographics within the state?
100%.
Yeah.
So we basically have two things happening. One, we're disproportionately older.
Right.
So more likely on the death side. And we have a lower birth rate than other places. And so on both sides of the equation, it's having fewer babies, more people are dying, tips us into that. And again, we're not the only state that has negative natural growth, but many of our peer regions, they don't have that problem. They all have natural growth that they then add to or take away from migration, but they could not grow through migration and still be growing. We don't have that option. We're going to be on the decline every year until we add migration.
But correct me if I'm wrong. In the last decade, we saw a pretty healthy in-migration from people in their, root-setting years. At some point, going forward, will those people result in more family creation? And will this trend maybe turn around? Or is that not looking to be the case?
I mean, again, I'm not a demographer, but from what I generally understand, they theoretically are taking into account those things. But what we have happening here is, yes, more root-setting years, people are coming. However, they're delaying, let's say, forming a family, marriage or otherwise, delaying having children. And so when you delay, sure. Now you might be having one child instead of two or three. And so that's where you get to that trend is what I think the demographers are leaning into is.
Got it. Yeah.
And again, that's not unique to Portland.
No, and I read something last couple of weeks ago just in terms of demographics and looking at just the size of the family, where 10, 15 years ago, as you had immigration coming from, say, like Latin America, that birth rates there, those are starting to fall. So unless
our household size continues to drop.
So it's hard to even keep up with that. So it's very interesting.
Yeah.
Are we, in looking at that with the growth of Clark County, is there a way to account how much of that came from within the region?
A little bit, yeah. So, we've dug deep into this in a variety of ways. And I think, the question seems obvious, like, why is Multnomah County decreasing?
Well, I have my theories on that, but
I have theories too, right? But like, as a PhD in economics, I'm gonna state the obvious, but it's not that obvious.
Right.
Either fewer people are coming or more people are leaving. But I think to me, there's a big difference if fewer people are coming than if more people are leaving. And I think not that one is good or bad. It's just there's a different understanding of what's driving that behavior. Right. What we see is not fewer people coming. We actually see more people leaving. And of the people who are leaving, their average income is higher. And so it's suggestive of, something going on in the region where people are looking at the tax value proposition in Clark County as one of, not the only factor, but that's one of those factors. And I think also increasingly as people are coming to the region, they're increasingly choosing Clark County as their destination. So to the region, we're still attracting people like we always have. Just more people are leaving, and the people that are coming to the region are less likely to locate in Multnomah County, Washington County, and Clackamas County than they were, let's say, 5 years ago, and increasingly in Clark County. And that's where you get that balance, where as a region, it's one thing, but you get this very disproportionate outcome at the county level, which of course here is two different states, right? So I
was going to ask you about that with what you did. Sorry, is in terms of the states, you've got two states involved on this, which is very interesting. So you're looking at, if you took Clark County out of the immigration and the growth,
it'd be really bad.
It'd be really bad. So when you're talking to the state of Oregon or things like that, do they see that dynamic of, there's not a lot of metropolitan areas that have that.
Correct. No, this is where I think now, for years in the report, we've only focused on the metro because that was probably pretty relevant. Today, because we have these very disproportionate outcomes. So let's take jobs, for example. Jobs in Multnomah County today, we're still down 3% from where we were pre-pandemic. So we have not recovered all the jobs in Multnomah County. Clark County is up 13%. So again, is this a chicken or an egg? Is that population driving employment? Is it one or the other? But the point is, I think you have to look at it in a disaggregated way. And from an Oregon perspective, the region is being lifted up by Clark County. And so if you think from a state perspective, this is much more troubling from an Oregon perspective, from a Washington state perspective. But from a regional perspective, some movement is to be expected. Mm-hmm. But at the state level, this has pretty important implications, certainly from a revenue standpoint. Right. When we're largely income tax dependent and our highest income earners, if they are leaving, per dollar of income earned on a higher income household generates more tax than on a lower income household. And so if you're losing residents that are typically more high income, as a state, that is problematic in the long run.
Okay, interesting. Okay.
So that's the kind of the backdrop of, what's happening. I think the question then is, Mike, you've talked to us many times about our shortage of housing or housing underproduction, as we call it. well, we just lost 10,000 people. Does that mean we no longer have a housing problem? And I think the answer is, and a typical economist response, it depends. It's hard to talk about. It's not a one issue topic where, but typically, yes, if you're holding everything else constant and you just take away households, that reduces the demand. So what we saw again, though, is if you look at housing under production in a region, this peaked in 2018. So again, not to suggest that we no longer have a housing problem that's very acute. It's still here. We just had 60 some odd thousand units before. And now in the last year, we have data that's 53,000. If we look at 2022 and 2023, where we don't have underproduction data yet, but will soon, and we think we're going to have negative population, there's no reason to think this number is not going to keep dropping. I think to me, the question is, if you're a developer and you're looking out at the market and you're saying, what's the demand? Is there a meaningful difference between 30,000 units of need and 25,000 units? No, that's infinite demand you can build into. And so we're still in a massive shortage. However, there is good news in the sense that building through population decline makes that problem less severe than it was.
It brings other problems.
It brings many other problems. So this is, the challenge here. But I think to suggest that, no, we no longer have a housing shortage, we still absolutely do for the foreseeable future, even if population isn't growing like it once was. Obviously, if it grows now, the problem becomes even more acute.
And do you think you're going to have to do more studies now with the uniqueness with Multnomah County, Washington County, Clark County, and what's going on in Washington, where you're going to say it's not the Portland region or the Portland PMSA? We've got to start looking at it by what's going on south of Columbia and north of the Columbia.
It's a great question. People always ask us, can you tell me what the demand for housing is in my city? And I said, no, you cannot, because no one thinks about a city border as being real.
Right.
They're looking at the housing market and they're trading off all those opportunities. And so we typically think about the metro as that market. But it's becoming increasingly clear, I think, to your point, that maybe that's not one market. Maybe it now is two or maybe even multiple submarkets. And so, we do have what I would call estimates where we can look at county level underproduction. And we've done that, and the county level underproduction is more severe in Clark County if you think about it as its own part of the market versus here. But I mean, again, that's kind of a little bit of splitting hairs. So I think there's starting to be more of a case to be made to say, the overall market demand maybe is greater in Clark County than it is on the Oregon side. We still have a shortage of housing in Oregon regardless.
On the housing side, I'm more thinking on the immigration, where you've got now showing data that immigration is coming into the region, but it's disproportionately going to Clark County and what that's going to do. You said, from a state issue, an estate that's built around income tax for revenue, that's a huge dilemma. I mean, that's a huge issue when, again, we're not talking it's an hour away to go to cross the river. It's 10 minutes away, and that's driving all this from employment, migration.
When I'm thinking, I remember there was a stat from years ago, something like 80,000 people used to
cross
commute
the bridge,
from Vancouver to downtown Portland every single day and back again. I wonder, how many of those people are actually commuting anymore?
That's a great point.
And working from home and working remotely. We're seeing it in the vacancy in the office sector downtown. And, there's a lot of discussion about, what is the future of downtown? If not for office, is it, conversions to housing? And so I think that's really interesting as, Clark County being the beneficiary of that growth in the region, but maybe Multnomah County and some of the Oregon counties here kind of being the...
the way tax law works for personal income really benefits a hybrid work schedule from Washington. Because if you're not in Oregon, right, you're not getting subject to that tax. And so even 2 days a week is a meaningful tax benefit to be working at home. So I think that's, a big strength if you're on the Clark County side, which is, hey, you're not in the office 5 days a week. This is a meaningful benefit. And from the Oregon side, that's a challenge. I think coming out of the task force, that's part of this too, is what's the tax competitiveness of this region relative to the Oregon side versus the Washington side.
And was this a pretty unique issue compared to the other peer cities?
Yeah, so that's, a great question. When we look at our peers, the assumption, I think, is you say Denver, Seattle, Sacramento, Minneapolis, they're not suffering this. No, the data shows they actually have almost the same pattern. If you look at the charts, you'll see peak population growth in Denver, 2018, peak population growth, Seattle, 2017. They all also peaked pre-pandemic. And again, why? I think this is the increasing if you're all suffering from the same housing affordability and other challenges, right? Housing affordability or housing is not the only reason that people move, right? So, but a region that is more attractive, more affordable, and all of those kind of had a similar trajectory, all continued to grow, but just at a lower rate. And then the pandemic came. I think the main difference is, again, looking at the data, they all have natural change. So Not to say that they don't need immigration, they do, but to a lesser extent than we do, because without migration, we will not grow.
Got it.
They can absorb limited migration and still continue to grow. And obviously, that's on a region by region basis. But the peer regions, again, not unique to Portland, also kind of experienced a decline for the several years leading into the pandemic in terms of the rate of growth. Still growing, all of them grew, but at a lesser rate.
Slow down the rest of them. Yeah.
Interesting.
So, that's the
whereas those older peers in Nashville, things like
they're
that,
continuing to grow. That's the big difference. They never, I look at it as like we were all rocket ships and then we turned off our fuel.
And they kept going.
And so we kind of like leveled off and we were still in orbit. We're still growing, but we weren't up on that exponential growth, whereas they continued to grow at rates the same or even faster than they did before.
Right. In which, in our world, on the supply side, you're looking on the multifamily side.
Yep.
Austin, Nashville, massive amounts of supply online.
Correct.
Now they're having issues on absorption there, but they had the demographic growth not slow down as we did. So
yeah, exactly. So I think for us, you look at what's the sentiment of Portland relative to other investment opportunities, right?
Right.
ULI has the development opportunities report where they say, rank the top 80 opportunities, and again, we're seeing a lot of alignment here. 2017, Portland was a number 3 opportunity in the country.
I remember that.
So what happened? Everyone looked at the data. Wow, population is growing. This is a great place to be. A lot of investment dollars came in. The development pipeline grew massively. Mm-hmm. Since then, it stepped down because when you're at the top, there's only one way you can really go. So we went down a little bit to be expected. Then the pandemic came and lots of the other activities happening in and around the city, and we dropped off a cliff. We are now 60th. No one was interested in bringing investment dollars, and we're still loosely in that space. We've barely come back up. We're still in the 50th range, where Seattle is now still number 9 or number 10 in terms of its investment opportunity. And so again, you start to look at us relative to our peers. All of our peers are perceived to be better investment opportunities except for Milwaukee. So Sacramento, Minneapolis, Denver, Seattle, if you're looking at places that have relatively the similar story, right? Similar population challenges, et cetera, the perception is those are better opportunities. And that's a challenge for Portland for sure, even if the conditions here are good.
And what do you think that's factored to that? Because we were down at a national convention a couple of weeks ago and still having to fight that, perception of what Portland is. And curious what your take is to why, money is looking, or opportunity money looking at those is, like you said, there's some similarities. We're not comparing ourselves to Austin. We're not comparing ourselves to Nashville, Charlotte. We're, more typical cities. What do you think the reason is for that?
I think there's always, there's perception and there's reality.
Right.
I think the reality here in Portland today is, and you'll see this when we get in some of the downtown data, like our city is recovering.
Right.
Not dissimilarly from other places, but the perception is when the national media comes in and portrays a dumpster fire, they don't come back and say, oh, by the way, Portland's actually not doing it. That doesn't sell any headlines.
The byline, the correction at the bottom of the paper.
Yeah, exactly. So, we have a really uphill challenge, and that perception moves very quickly in a negative way. How do you build back that positive momentum? It's like one deal at a time. And so I think, to me, the opportunity is someone's going to come in and realize, actually, the pipeline here is shutting off. Building now and delivering in 3 years actually is an absorption. You would love to have that as the case, right?
As an investor.
Right. And so the first people who are moving in are going to see that and they're going to deliver. And then and that's what happened in 15, 16, 17 is those early investors in the region had no absorption challenges. Rents went up a lot. We got into our peak on affordability challenge. And then what happened? We delivered a lot because, there's always that lag between performance and investment activity. And so now is that early phase of that activity. I think that's what it's going to take, which is unfortunately means it's going to come back slowly over maybe 3-4 years. I don't see any reason why the opportunity ranking, other than people who are doing deep research and saying, oh, the pipeline in Portland is much smaller than in similar markets.
Right.
Maybe that's an opportunity. And then what does that look like?
Well, one thing I was going to ask you to maybe kind of dive into a little bit is just the difference between, the development pipeline from a permit standpoint and supply and deliveries. Because if you're a housing provider on, boots on the ground right now, you probably would not think that there's a housing shortage. Rents are flatlining or going backwards. Expenses are up. And so it's getting more difficult to operate, apartment properties. But that said, you look at the data, 2023 was down 54% from 22 from a permit pipeline perspective.
Yeah.
What's going on there? Why doesn't it feel like we're in a housing shortage?
Yeah, I mean, I think the challenge in construction, right, is it's one of the few places where, as an economist, I feel confident in forecasting because there's a predictable sequence of known times, and it's like, if this happens, then this, and this happens. And so I think if you said to people today, we have more people employed in construction now than we did a year ago, they're like, that can't be right.
Right.
But the market is terrible. No, we have like almost 1,000 more people employed in construction today because all of those permits and activity investment decisions were made a long time ago, yes. And we're continuing to deliver into that. When you look today at the permits, though, you mentioned we're down massively for the year of 2023 versus 2022. If you look at the last 6 months of 2023, there were less than 500 permits for multifamily in the city of Portland. That used to be 1 month of permitting.
Right.
So when you project out that pace into 2024, we're on trend for 1,000 units. Maybe less than 1,000 units. So we're going to step down again by 50%. And then the answer is why? That's the market macro conditions plus, let's say Portland specific stigma. And so when we take the permitting pipeline and we look out at what's under construction, right? Under construction has been holding relatively flat in the city. It's down in the region. As all those deliveries happen and there's no pipeline behind it, now under construction activity is going to drop again. And so that's that very cyclical nature you see repeating over and over again in Portland along our history, which is what happens. Rents generally stay flat when we're delivering a lot with concessions.
Right.
Construction costs continue to go up. It becomes really hard to build. Then what happens? We stop delivering. Concessions go down. Rents go up. Conditions change. We can build again. We start building, but that disconnect is always the leading indicator, lagged indicator. Right now, we're kind of in that precondition of pipeline's going to drop. What's going to happen with near certainty, right? We're not in a recession. Incomes are going up. What's going to happen? Rents are going to go up, right? Once you absorb all of the product at the high end of the market, concessions go away. That just works its way through to
right.
broad-based rental increases. Right. And so again, as an economist, I see the pipeline going down. Unless there's a big macro correction, rents are going to start going up again.
And how do you factor in? I think one thing that was different than a lot of these swings that we had is we talked about a lot of the markets, 17, 18, hitting the peak, population growth, permits. We had a situation where we had then a kind of a new regulatory environment put in place at that time. So as we're coming back, and like you said, we're going to have less permits, less deliveries, rents are going to go up. Is that going to factor in more people coming in to develop? You would think so, but then you have this other layer that we didn't have before, pre-17 is some of this regulatory environment. I wonder what that's going to do in terms of sparking this demand that we can, coming out of the Great Recession, it was, by 13 we were going. Is it going to delay that recovery? Is my question I was thinking in terms of this region compared to some of the other regions.
Yeah, no, it's a great question. I think the city has been tracking this and trying to get out in front of this and recently recalibrated
right.
inclusionary to broaden the geography from which the tax abatement was offered, and then also offer more broad-based regulatory relief around ground floor active uses, bike parking, articulation, some of those other cost-driving factors. So, I don't think we have a great example because the last time everything was grandfathered in prior to inclusionary, the
right.
big run-up, is it going to impact the, what I would say today is market rent today at the top end is pretty close to 80% of MFI. And that was not the case previously. It was near 110% of MFI. And so inclusionary taking units from 110 to 80 is a drag on development. But if market rate units today are at, let's say, near 80%, I think it will have less of a drag than it would have had, let's say, in 2017, if not
okay.
for grandfathering. But again, anytime you have a policy that does that and adds that uncertainty, I think the chances of it adding likelihood to development are slim, and the chances are greater that it has some negative impact.
Right.
But the whole point of the calibration policy is it's trying to get to a place of general neutrality.
Well, I think it's worth pointing out one of the data points in your report was that 60% of new permits were under 20 units.
Yeah.
Which is directly because of inclusionary zoning.
Yeah, no, I think, there's two things going on. For sure. One is there's a meaningful cap of if you're building 19 units, you would never build 20 or 21.
Exactly.
Right.
But also similarly, the types of capital that are invested to large scale projects has dried up. And so the smaller scale developer who has, let's say, friends and family or home office money fueling that can continue to build. If you're building a 150 unit building and you detract, tens of millions of dollars of equity into the region, that's much harder to do. So I think it's both of those things. I don't want to say it's entirely inclusionary.
Sure. Yeah,
I'm sure
fair.
some of that is inclusionary. Some of it also is the broad market conditions. But I think the point is still, from the city's perspective, like that's important information to kind of balance out.
Yeah.
And like you've brought up, the city's going to have this other, kind of hill to climb over is what do you do with Clark County? How do we incentivize, that capital coming in, not coming in and then crossing the river to Clark County? Yeah, they're coming to the region, but they're not really coming to the state. And then, what are we going to do there? And it sounds like there's a recognition that we have to address that in some way.
Yeah, I think it's, again, very typical to have two states on a major metro area, right? Is not typical. There's a few limited examples of that, but not many. And the regulatory environment being very different, I think, is the challenge. It's not the fact that it's the state, it's the fact that we have inclusionary zoning, let's say rent stabilization and other policies. And on the other side of the river, we don't have any of that. And we have incentive-based policies like multifamily tax exemption to kind of encourage the development of housing. So that on top of, let's say, equal market conditions certainly tips it in the scale of Clark County. And historically, the Clark County market conditions haven't been as supportive of new development. Today, I think they are as supportive as new development. And so that is a very different lens to consider than, say, even 5 years ago where that wasn't the case.
Right.
Mm-hmm. Mike, I was reading through the report and it mentions the affordability wall. I was hoping you could just kind of talk about that. What does that look like and how does that kind of play out in the economy from an affordability standpoint?
Yeah, affordability is, as a concept, easy enough to understand. But then you start to unpack what do you mean by affordability? Are we talking about regulated units, not regulated units? We're talking about rental versus ownership attainability. There's a whole slew of ways you could think about that. I think for us, as we think about regional competitiveness, let's say, they have what they call a regional price parity. So it basically says, how affordable is it to live in your city relative to the U.S. average?
Right.
And when we started doing this report in 2010, Portland was indicative of the U.S. average. We were the average city in the U.S., but our housing was more expensive. We were about 12% more expensive on housing. So even then, housing was more expensive, but it was offset by other things to get back to even. What's happened since then is we've increasingly become less and less affordable. Today, we're 8% less affordable than the average U.S. place. Our housing is like 28% less affordable. And so what's driven this is this affordability. And we think about a wall, the question is like, how far can you push that? Our peak affordability in that measure actually happened 3 or 4 years ago. We've come back down over the last few years, and with that, we topped out at about 30% less affordable. And the question is, relative to other places, if you're looking at moving to, let's say, here versus Boise, 5 years ago, Boise cost 30% less, and today it costs the same. And so you get to this point where you regionally become no longer an attractive affordability play. You're just at parity with everyone else. And I think for us and many of our regional peers, that's kind of where we're at. This is no longer a place to come that's affordable, right? With a notable exception of relative to California, we're still attractive. And that's where we still see strong in-migration from California because we are relatively more affordable. But at a certain point, when you start thinking about the rest of the country, we are generally, by most measures, a very unaffordable place to live.
Right. Like you said, compared to California, we're affordable, but and hence I think that may be some of the benefit where Texas is now, the funnel that used to come north is now from California now going east. And so it's driving a lot of that, growth over there.
Yep.
Yeah. Yeah. I think, it seems like an interesting thing to pay attention to because, as we talked about the supply pipeline, rents, increasing in the coming years because construction is going to slow down, dry up. It seems like the affordability standpoint of it long term could create like a kind of a negative feedback loop where it becomes more unaffordable, maybe causing more people to think about where they're making their home, going across the river to Clark County, kind of continuing that kind of downward spiral to a certain extent. So maybe something for, city leaders, legislators to pay attention to.
Yeah, I mean, I think to me, the big pressing question today is, let's say a representative household earning 120% of area median income at a certain age profile with children, a high percentage of those households would have looked into homeownership as an option, over 80% of them. That's not happening today. And is that because only of the interest rate environment? Is that because of preference change? Is there a possibility that our share of highest income earners will continue to be renters? I think that's unknown. But to me, that's the big question is absent that. I think that's a very different market than if people who are renting today are still continuing to demand rental units versus if they all move into homeownership at a rate similar to previous generations, then our income profile of our renter looks very different in 3 years than it does today if that happens.
Interesting. Well, thank you for taking the time to do this. It was very enlightening, and I'm sure we'll have you back again and some more interest. I'm sure it's a very interesting time to be an economist.
There are a lot. There's no shortage of topics to explore right now.
I mean, how do you deal with COVID and all that? What that did to numbers. So I think these reports are great. You can go on the website there, and if you want information, look it up there. And we'll see you again on HFO TV. Thank you.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.